And so
Ladies
that's
and
why
gentlemen,
you
ladies and
should
gentlemen.
always. Oh, we were in the middle of a conversation. I was about to give away the secret of the universe. So my bad.
Okay, dude. Welcome back to the SoFi Weekly. But today, although we are, streaming on a Saturday, we have hit not 52-week highs, but probably closer to about 140-week highs on SoFi, the highest price that SoFi has been since we've started the SoFi Weekly. Let's go around the table, see how everyone's feeling. Chris, what does this mean to you?
What does it mean to me? Feel slightly vindicated, just a little bit. Excited. I think that SoFi's finally, it should be catching a bid. It should have caught a bid a long time ago. But yeah, no, feels very good.
Roy?
I'm feeling a little blue, a little SoFi blue. Yeah, it's exciting to see it perform. I catch a bid. Fantastic tailwinds, and it's kind of frustrating when companies in the same sector are flying and SoFi is not. Well, this is not one of those times. So it feels like, at least as far as stock price action and the phenomenal print that they had in Q3, vindication.
Tevis?
Yeah, I mean, I made a video earlier today and I was saying that there's an entire wave of investors who have never seen this price tag on SoFi. I mean, there's, those of us here who have seen the 20s and have even bought it in the high teens, higher than where it is right now. But so many people have got onto the SoFi bandwagon over the past 12 months. And this is the highest they've seen it while they've been invested in that stock. And so I think it's exciting. But then at the same time, you're getting that sentiment follows price idea of people like, have I missed the boat? I'm waiting for a pullback to 8. I didn't have enough time to accumulate. Are we going to 20? Like people who are buying on very little actual DD, who are buying just because the stock is going up. And I just find it funny because we said all of these things were going to happen. And, maybe we might not have been on time, but directionally, I think we're on the pulse.
Yeah, fundamentally,
Tevis guaranteed it was going to 20, I think, on that video by the end of the year, didn't you?
I didn't guarantee it. I made sure to add many disclaimers, but I do think that like my whole thing over the past couple of months is that this time is different and very cautious when I say that, because we've been in situations where it's pumped and then it's dumped before, several times actually with SoFi, and it's struggled to break out of that range. But now that it really has, it seems to be forming a momentum upswing where even if you just look at the sentiment around and even the headwinds that the company might have, the bear cases that might be out there, like they're diminished, right? And this company has proven time again that they can back up their numbers. And so it's just a matter of, and I've seen this with multiple stocks in the past where it's like very gradual at first and then all at once, where the market just re-rates them. And I just think that we could be approaching that time for SoFi, that the best is still yet ahead.
So I was actually going to do a video to Tevis of why SoFi would not get past $20 this year. And it was going to be a very short video. Do you know what the thesis was? It's because you have not sold covered calls at 20 yet. If you did, we'd be there.
Yet is the key operative word. But I feel like I'm going to be forced to roll up quite a bit on this one because I'm catching it at a really weird time where it's just breaking out of technical patterns. And so, yeah, man, I think selling $20 calls is definitely not outside the realm of possibility.
You're a big TA guy now, eh?
No, I mean, I don't know. It's I don't know. We'll get into it with the covered calls because I think it's just funny.
So while we're still on price action really quick, is this something that you guys are thinking is the start of a big move? Chris recently, before we ran into the 12 and 13, said, you know what, we might be sitting in a range here for a bit, a little bit of a price band. Is that going to be the case here? What are your guys, obviously we don't have crystal balls, but what is your gut feeling? We'll start with Chris in terms of price action over the next, let's say 2 weeks or so? Because really, this massive rally has only been coming out of the back of just a couple days.
So I think, again, not a big TA guy, but I dabble at times, right? Like, and I've been in SoFi and following SoFi and writing about SoFi since it was in the 20s in 2021. And so there were, back then, everybody thought of 14 as a floor. So it had actually gone down and bounced off of 14 3 separate times at that point. And so and then when it fell through in kind of early 2022, it tanked from, so we got the bank charter came through in January of 2022, and it popped back up from like 12 up to 16, and then it cratered all the way down to below, I don't know if it was quite below 4 or below 5. I think it did into the 4s by like that March. So like in the next 2 months. And so, but at that point, I think that 14 is going to have a little bit of resistance, but I don't think there's going to be much resistance between here and 14. I said earlier this week that I think that if it breaks through kind of that 1170 52-week high, that there's probably not going to be a lot, that there shouldn't be much resistance until we get to the $14 range. And I mean, we just blew through 12s in like a day, in like a couple of days, right? So I do think that it can hit 14s. I think at that point there might be, just from a technical perspective, it looks like there might be some resistance at those levels. I do think that Upstart gave us a big boost on Friday, and we can talk about that later if you want, right? Kind of legitimizing the loan platform business and kind of giving a little bit of the fact that Upstart is worth so much makes it even more obvious than it's ever been before that well, not even more obvious, but makes it more obvious that SoFi is undervalued at its current levels, at least in my opinion. And so if you're going to, reward capital light businesses, SoFi's loan platform business is more capital light than Upstart's business. And while it's not quite as big, it's only been out for 1 quarter, and it's still already it's already about, 50% of the revenue. I don't know the exact numbers. Well, I guess it's more like, call it 40% of the revenue, but with no loss share agreements or anything else. So I think there is a lot of momentum, and the way the stock market works, once things start to re-rate, then the momentum usually keeps them going. So,
Roy, who do you think is buying this? Is this short covering? Is this active funds? Are these indexes? Is this retail? What's going on?
It's me. It's me. No. Seriously, I have my position. I'm happy with it. I think that there's a combination. Of course, there's some shorts that are covering just because we're entering a macro environment where they realize, even if they think SoFi is a terrible company that's run terribly, like when you are being blown and propelled by massive, massive tailwinds in the coming year, it doesn't take an idiot to say, you know what, maybe this isn't worth the risk. It already wasn't. They weren't listening to us. They were just like, hey, it's at $7. It might go down to 6s. It's in the 6s. It might go down to nothing. I don't think that they were thinking that, but if they were, they deserve to lose money. So I think it's a combination of shorts covering. We saw a lot, and I mean a lot, of retail be sellers in the 7s, and as we bounce up to $8. Not everybody there, but there are some that are kicking themselves that are getting back into SoFi. And of course, when it goes down after a little while, they'll probably sell again for a loss. But it's the reality of, it's probably a combination of those things, maybe a little bit of institution buying too, although I'm a little bit skeptical on that. But yeah, as far as like what's going to happen between now and the end of the year, I'm very, very much, if Chris is a TA novice, like I'm even more extreme. But the RSI is very heated on the daily and the weekly. And so usually when that happens in a stock, especially in the weekly, it needs a little bit of time of consolidation. That said,
you own Palantir, right? How long has that been overbought on RSI? Anyway, sorry, keep going.
I was going to say, that said, in a bull market, those tend to ignore RSI for longer. And when it's up above 70, when the RSI is below 30 in a bear market, it tends to ignore that a little bit longer. So it can take some time. Also, when a stock is coiled and it's held down both by short interest and also it's just repressed far lower than its fair value, it'll ignore that for a little bit longer too. So, to Chris's point, we could continue running up through the end of the year. That wouldn't be shocking. That's not impossible at all. And this isn't just base speculation, like happens with in the stock market all the time. There's some of that, I'm sure, but it's very obvious what SoFi was doing, what they were building, and what they look like over this next year. I still think it's undervalued.
Tevis, commentary on what you think is happening right now, if you think that we're going to be drawing back, staying stagnant, or continuing to head upwards, and then who potentially is buying. And just so everyone's aware, whatever he says, you know what I'm going to say. It's probably the opposite. All right.
So, okay. I do think that there will be chop between 14 and 12. Like, okay, so two sides, right? Like the emotional side and then the logical side. The logical side says that there's going to be chop because, like Chris pointed out, there is resistance at 14, and the previous resistance, 1170, is probably going to be, back tested to form support. So between 12 and 14 is going to be some like sideways movement. That's the logical side, right? If I had to put money on it, which I am, I'm saying that there's going to be some sideways movement. Now, the emotional side is saying that there's a lot of macro tailwinds. There's a lot of strength. There's a lot of money on the sidelines that are just being pumped into this market as rates continue to fall, and the Fed validated that. There's a lot of uncertainties that are alleviated, right? We have a definitive outcome on the presidential election. It was not debated. It was a pretty quick turnaround, right? It's not a question left outstanding. We know that money on the sidelines is eventually going to move more and more into equities, probably ETFs. And so there's a lot of upswing in terms of the momentum. There's a lot of questions that are answered. And I think that, for my sake, for my covered calls, I hope that we have a red day this week. Like one is all I'm asking for, because since the election, we've had 3 or 4 big green days in a row. And so, yeah, I do think that there could be strength to test that 14 range. If we pass that 14 range, I think we blow right through it and we go much higher. But if we get rejected on that 14 range and form a higher base, then that's fine with me as well. So that's what I think. I think we just saw the same comment. Okay.
Oh God. I'm sorry, we're dying to a comment. Exotics just said, we're going to the moon. Oh God, that actually got me so hard. All right.
So yeah, that's my thoughts. It's pretty much a non-answer, but it's gonna be a lot dictated by what the market as a whole does over the next week. Like if the market as a whole has a pullback, then SoFi is gonna follow that pattern. I don't think it's gonna break trend.
Yeah. I recently discovered a pretty good index, which is looking at how bullish the market is. There are some that you can look at, like the Buffett indicator, for example, to see how overextended things are. But honestly, the Tevis indicator is also a very strong one. So once Tevis starts making money in the stock market, you know that things are about to flip. So his top 3 positions are SoFi, Tesla, and Bitcoin. He's making money right now. This is not what's normally supposed to happen. He's supposed to make money as a software engineer, but things are flipping, and it's a scary time. So,
bro, it only happens once every 5 years. Like, it's like a cosmic event. Like, give me a break.
That's why we paid TJ to get him into covered calls, so that we could keep going up as he sells those and leaves money on the table. So thanks, TJ, if you're watching.
It's actually insane.
I'm still thinking of that stupid comment.
I wrote covered calls on like 6 or 7 different. Like I wrote them on QQQ, I wrote them on Tesla, on TSLL, on SoFi, on AVGO, and on CleanSpark. Literally every single one got either assigned or I had to roll. Every single one. It was insane. I'm not
TJ is watching.
So with that, Tevis, you're going to hate this because I sold some too, and I am underwater. I let some go on some call. A lot of them didn't get hit at all, but some I let go, not on SoFi, but in another couple of positions. Some were Bitcoin miners, and I'm those I just will all day. So I don't really care if they go or not. I did sell some covered calls for 13, if you remember, because I was like, hey, 13 is probably safe because you're doing 12.50 or 12. And so did that. And of course, I thought it was fine until Friday. And I'm like, oh, man. So ended up buying back 3 for a penny. It's just 5 total. Like I just play stuff on SoFi. I don't really want to touch covered calls right now because of the short interest. But I mean, if the profit is there, if the money is there, but right now the premiums are just not worth the risk. So I had 200 shares that were going to get called away because we hit, I think, 13 or 1301 at close. But depending on the exchange that's being used there, they have up to, it's usually 30 minutes. It can be a little bit longer to settle that. And so whoever is holding the other side of that, they have that time to decide. And so after hours, action can influence that. So these people, they saw it dip by like 2 or 3 cents, and they're like, you know what? Never mind. It was $13. Forget it. So held on, kept the premiums, kept the shares. How do you like that?
He's very happy for you, I can tell.
Yeah, I'm very happy for you, Roy.
Do we want to switch topics really quickly to talk about some October updates, specifically website traffic?
Sure.
Ooh, I haven't seen this, so let's take a look.
October website traffic came in at the 3rd highest month that they've seen in the year, and in fact, I actually think it's the highest the 3rd highest month that they've seen in company history. But what did you guys think about this at first glance? 16.5 million views according to SimilarWeb. Any insight on this? Is this a forward indicator, or should this just be sort of glanced at and left alone?
Leave it alone. It's fine to cover and look at for products like SoFi. The download rate of the app is much more indicative, I think, than the website itself. You know, it's not bad to see it spike up, but it's not really that meaningful. You know, if you look at that graph or that chart, you'd look at September and you'd be like, oh man, there must be an issue and problem. No problem, no issue. So, and I see this on other sites too. You can get a general idea of the trend, but if it's a website that really is known for their app, the website traffic just doesn't mean that much.
I mean, it's hit 16 a bunch of times in the last year, and it's been pretty flat, but we've still been gaining, you know, tons and tons of members, 600 to 700 every single quarter. So I'm not that concerned about it. But again, it's worth looking at, but I wouldn't read too much into it. I'm kind of in Roy's camp.
Tevis?
Yeah, I'm in the same boat of like, cool, but at the same time, I don't think it's going to be that indicative. But I mean, I think Q4 is going to be a strong quarter for member additions. I think we all do. So that website traffic, like that's the first month of Q4. Eventually that's going to back it up, like, or go against our thesis, right? So we'll see if it keeps up. I think if we see 3 months above 16 and we start to form like, you know, higher bases of viewership or of visits, then that's obviously a good sign. But there's a lot more that goes into it. So it's very hard to draw signal from it.
So one thing that I've been covering on the channel like crazy recently has been the upstart comparison for SoFi, and especially in an environment where if there is a good macro, if there is massive origination demand, how much customer acquisition cost spiked from upstart, for example. So whenever they were originating like 1 billion, I'm talking back in like 2021, whenever they were originating about $1 billion dollars worth of loans,
they got up to like 4 billion.
Yeah, so it went from 1, 2, 3, and 4 in a 12-month period. But whenever they were originating 1 billion, they had like, I think it was $30 million worth of customer acquisition cost. And then that kind of went alongside with the origination. So it went from 30 to 60 to 90 to 120. And I'm curious what you guys think about this now that we have a loan platform business, what the expectation is for member count if there is a large loan demand from institutional buyers. Do you think that this is going to affect member count, or am I reaching in that opinion? We'll start with Chris.
So I think it will, for sure. I was reminded that Noto last year said something like 20 to 30% of their loans are existing members, and the rest of them are new, typically. So of their originations, I hope that number has gone up a little bit, because this, they've grown a lot of membership in the last year. Maybe it's 30 to 40%. Who knows? But even so, probably call it at least or around 60% of their new originations are new members, right? So they're people that they're getting on the platform from somewhere else, that they're getting through kind of other sales and marketing channels. And so I do think
pretty heavily towards home loans though as well, right? I think home loans is something like 70+% is from existing.
Home loans is a lot that's pre-existing. It's a ton, but just their personal loan originations, it's less. So, but I do think that, and this is something that I said in my earnings review. I don't think that I took into account. I thought that they were going to get higher originations, and I didn't think that through completely. And I do think that this is going to be a tailwind for membership growth. I also think that it allows them. So one of the things that kind of long term I've always worried about a little bit is that dang it, lost my train of thought. So there's only so many people who are high FICO, young, and make six figures or more, right? Like that's their target market. But at some point, they're going to have to expand beyond just like that's who they want to focus on. But you still need to expand. Once you get to, call it 10 million members plus, you're already there's only 330 million people in the United States. So you're already at, call it 3% market penetration, or about 3% market penetration. And if you have the subset of like people between, call it 18 and 35 who are making six figures or more, that's a much smaller subset of people. And so all of that is to say, this allows them to expand the number of people that they are able to take into the platform without taking any balance sheet risk, which is a big thing, because they don't want to open up their credit box to lower FICO and lower income people and keep that on the balance sheet, because that's not what they feel comfortable with for their risk profile of loans that they want to hold. But they said specifically, these are loans that otherwise we wouldn't have been originating. So this allows them to go out and expand the credit box to make money on that immediately. And then the people who are getting these loans, they're still being serviced by SoFi, which means they're a SoFi member. They're paying monthly dues on SoFi. They have to log into their account to pay those. And then SoFi has their information and can cross-sell them on checking and savings and credit card and everything else. So it's a way to widen the top of the funnel a little bit into other credit boxes without having to take the risk that's associated with those lower credit scores and lower income earners.
Is it top of funnel or...
No, I mean, it's not really top of funnel. It's like a side funnel, right? The top of the funnel is still SoFi money, but it does allow them to get people who are big, who otherwise wouldn't be able to, or wouldn't be the target market. It allows them to give them loans, right? So it does expand it a little bit.
Roy and Tevis, any opinions on the potential scaling of customer acquisition costs or members into 2024 and 25?
I think the loan platform business will have a positive impact. I just don't think it's going to be as impactful as you guys are thinking. I think it's going to be more impactful for the actual financial numbers, less so for members, just given the discrepancy between financial services and lending. Like it's way easier for them with a lower customer acquisition cost to get somebody into the ecosystem through like Relay or a financial services product, even considering them opening the credit box through third parties from the loan platform business. And the discrepancy in members shows that, right? I think you have over a 6x financial services to lending.
6.3x.
Right? So it's just financial services is going to be the main, at least in my mind, is the main driver of how good of a quarter on a member addition perspective SoFi is going to have, more so than lending. And yes, it's going to be positive for lending, and yes, it's going to contribute, to their financials in a way that we didn't expect, that contributes to them beating on all financial metrics. But if we're thinking about members, I think that's the thing that's going to have the lowest positive impact. It will, but not as much as financial services would.
See, I actually think potentially the opposite is happening. If you look at customer acquisition cost, this quarter it's
I have it up
spiked
if you want to share it.
Sure.
It didn't really spike.
Huh?
Unless I calculated it wrong. Maybe I got the numbers wrong. That's possible.
I'm seeing it go from 287 to 360.
Let me check.
The
Maybe
highest
I
it's
did my
been since
calculation
Q1
wrong.
of 2023.
They do. I mean, they pay more for lending members than they do for financial services members. That's for sure, because they're worth more.
Here, sales and marketing. Oh, so you know where you're probably calculating and I'm calculating differently? You're calculating 756,000 new members.
Yes.
That makes sense.
So I'm taking new members,
calculating
not
for.
net,
Yeah, I'm
because they
calculating
did
for net.
drop a lot.
Yeah, I have to adjust that then.
Yeah, that is something, though. Not so much on the member front. I think that they'll do fine. That's been customer acquisition costs. It's going to change a little bit just because they'll have to change. Different macro environment, but I think it'll hold relatively steady, and membership will continue to grow. What I have my eye on, though, is in this, alludes to it, like that big difference between your number, Tanner, of the total number of new members versus Chris's, which is the net, and a much smaller number. Will that churn continue, or will it actually accelerate? And part of that is they get more and more members, even if the percentage that churns off stays the same. That's going to be higher, but a little bit of spike up there. There's just something not to be concerned with, but just to keep an eye on.
Yeah, it was interesting
I'm
because
actually-
last quarter they had like no churn whatsoever, right? And then this quarter there was a large amount. Do you guys have any thoughts on that, Tanner?
I didn't actually, but I do like the fact that it is happening, because there was a lot. It was almost like a bear case of like, hey, we don't know how many accounts are not even real or not using the platform anymore. SoFi is definitely showing off that they are looking at active customers, people that have funds in their account, are spending some level degree, like some revenue producing statistics. So I'm actually excited about that. Even if it does bring the member count down a little bit, it's a more accurate number.
The only thing that I was thinking it could be, but I couldn't put the two together, is Tevis must have made some sort of bet. Just kidding. Sorry, Tevis.
I mean, I say things that are contradictory. I think a comment highlighted it. They're like, well, he has covered calls at 1350, and then he said it's going to 20. Like, which Tevis statement should I believe? Because these are two conflicting things. So we'll see what happens. But in terms of member count, I think
his own bad luck.
Yeah, I'm trying. I love how Chris posted a chart too. He's like, let's see if this stops it. It's like, bro, I've been living with this my whole life. It's not going to stop it.
I did. I tried to use my curse to help you, man. I did everything in my power.
No, I appreciate it.
And even on November 8th, Kramer came out and said SoFi is a tech company, and the stock soared. Like, we're seeing there's a change in the generation here. Like,
yeah,
the curse has been broken.
Yeah.
Well, the other curses might be legit, but Tevis is just like way up here.
Bro, talk more shit, and I swear to God, I will buy Palantir at $57.
Could you at least warn me? Actually, you know what? I have some underwater covered calls on Palantir. Yes, do that, Tevis. Slightly underwater. Man, that thing went up 40-something%. It just so
Insane.
many stocks went up. I mean, like even
I have
ones
lots
that are
of
just
thoughts about
barely on the
Palantir.
radar. Oh yeah, no, but like AppLovin. Have you guys seen AppLovin? That's been on my basically don't lose track of these companies list, along with some others that have done very well. And Unity's on there too, so not everything's great, but it's one of like 5 companies, and it's up like 628% this year.
AppLovin is up 80% in the past 5 days.
Yeah, I believe that's earnings.
Yeah, it was
and some
earnings.
announcements. Yeah.
Honestly, a lot of people have gone back and forth saying good and bad things about Jonah Lupton, but I find that this dude knows how to like catch explosive stocks. It's crazy.
You know, one stock I've been actually getting more and more into. I've been reading up in the background. Actually, I'll tell you guys in the after hours. How about that?
I was going to say, you're going to tank it.
It's not SoFi related.
Yeah.
If it's not public, then
but
they have to pay for a membership, then he can't curse it.
So part of the reason why I bring it up, it's a little unrelated to, the curse discussion and everything, but part of the reason why SoFi is going up is macro conditions are changing. They posted a phenomenal earnings. Their peers that are in the same segment are posting killer numbers as well. It's clear that tailwinds are forming, but a big part of it too is just overall market sentiment that there were stocks that this isn't an everything up rally, because you can actually see a number of stocks, including Enphase, just get sold off very hard and aggressively. So it's not quite an everything up rally, but those that are seen as winners with the shifting macro, they did really, really well this week, no matter whether people were really down on the stock or not. But yeah, the narrative really has shifted on SoFi.
You know what we didn't talk about yet? Well, I don't want to get political, but the election. Now, I don't want to get into results or anything really along that line. I mean, you guys can talk whatever you want, but what did you guys think about election betting and the impact of some fintechs that might be getting into this, talking very specifically to Robinhood? Is this something that you'd like to see come to SoFi, or what are your overall thoughts?
Ooh, can I start?
Yeah.
So, okay. I think we can tackle it twofold. Number one, we talk holistically, like election betting as something that exists in the world. And then number two, we can talk about SoFi specifically. I think election betting was really cool because it was a case study in real time with this election around the predictive nature of a tool like that to essentially have direct feedback with everyday people that doesn't go through some type of institution. And it's interesting because on one hand, you could argue that it's going to be more accurate because people put their money there. But on the other hand, you could argue that it's going to be more manipulated because people want to change other people's opinions, and they can do that with, big sums of money. And we saw both play out. We saw that, coming closer to the election, the odds sort of flipped. And it was like some dude in France that was putting, a huge bets down. And people were saying, oh my gosh, look, the predictive, it's not 60-40 anymore. It's 50-50 now. What's going to happen? Like, it was changing people's opinions in real time. And then by the end of the election, what we saw was that this thing was like the most accurate prediction tool out there. Like, it got every single state correct in terms of would it be red or blue. And so, of course, you don't have enough data to say if it's better or worse. I get that, but I do think that it's another data point for you to form your own opinion. And that in itself is cool. And then also selfishly, like, I want to be betting on other events. I don't think it's available to me, but I want to have that ability. Like, I'm more libertarian in that point of view. Like, I think the market should decide so many things, and that individual people, like, it just gives more autonomy to individual people, because like even Elon, I think, came out after the election saying like, hey, you guys are the news now. There's so many points that push people to say that, hey, actually, the top 10 podcasts on YouTube swayed a lot of people's opinions. And so I think that there is something there, like there's a nugget of signal there to say that these election betting markets directly cut out the middleman and go straight to the people. And the people have a vested interest because they invest with their own money that they're putting at risk. And so that in itself, when you aggregate across hundreds of thousands of people, that's really powerful. Now, for SoFi, it would be a question of, does it align with their mission, and how much does it align with their mission? I don't think it'd be, something that, like, it's more impactful for Robinhood because of their entire mission statement and because of their suite of existing products out there and where it fits in that ecosystem versus where it would be for SoFi.
Yeah, and it definitely does fit with Robinhood's, mission statement. I've talked to Vlad about this. I've got his number the same way that Chris has Chris Lapointe's number. You can get access to him anytime, learn all the insider information. So, Chris, what is your thoughts? Do you think that this is coming to SoFi, or like what has he said?
Leading question, if you've ever asked one. I have not talked to Chris Lapointe in quite a while, since the convertible note deal, because we just had some questions. Anyway, just so that
He's on an NDA.
I'm not on any sort of NDA. So I this is just because I'm old school, and probably out of touch because I'm older than you youngins who are here on this call. I don't like putting gambling into a brokerage. Like, I don't mind that people go out and gamble with their own money. Like, that doesn't bother me, right? People can make their own decisions. I don't like the concept of putting it with a bank and a brokerage. Like, there's just something that I want it to be independent, because anyway, for a lot of reasons, but I won't go into I don't want to go into it, but that's just my personal opinion, right? So I don't want to see something
like
get into
securities contracts and event contracts.
Sorry?
What's the difference between options contracts and event contracts?
You mean like just like normal options?
Yeah, like I'm just saying, like that is betting, right? You're betting on an outcome at a certain specific period of time. SoFi does that. You can buy calls and puts.
Yeah, the time interval makes it a binary event.
Yeah, that's true. But it's still not necessarily completely binary. But then again, there's betting, right? Because you can get out of your bet. Like if it goes up, right? You can sell that contract as well. So go ahead, Roy.
The difference is that the options contract gives you a legal right to something. It's an option. You can choose to do it. You don't have to. Versus the futures contract, there's no underlying. It's pure speculation. I'm not saying that should be outlawed. I'm fairly libertarian on that too. I personally wouldn't partake on it. It would not fit SoFi's ecosystem. But no, there is a difference between something that gives you the right, whether you want to buy it or not, to buy or own something. Even futures contracts work like that too. You're buying bellies of pigs or barrels of oil, and
But what about
usually
cash
those are
settlement?
settled through cash. But there is an underlying actual asset that you have the right to buy and hold.
But that might not be true. Like, for example, like if they force if Robinhood gets into futures and they're only doing cash settlement, like, is that the right to wheat and oil and
No, that's the way that the broker does it. But that actual, we're not talking about the broker. We're talking about the option. The way the options contracts are designed is there is something tangible that will give you the right to either buy or sell at a certain price by a certain date. It's very different than just gambling. Which, if you want to do that, fine. I love that Robinhood's doing it. It works with them really well. Brings in probably some extra folks. Brought in, for 2.5 weeks, $5 million. That's great. No, it's in my mind anyway, a very fundamentally different thing. Now, federal government, it seems like, clearly it's different in their mind as well legally, because you see betting being able to open up in certain sectors at times where options aren't necessarily offered, or vice versa. So they're fundamentally different.
Roy expressed it way better than I could have. Well done.
I mean, look, Polymarket and Kalshi and all these, like, first of all, the first person that breaks into this market is going to open the floodgates for everybody else, because they realize that there's money to be made here. And so it's going to be a race for Robinhood and others. I'm sure, TD, Thinkorswim, Charles Schwab, like all of these other players are definitely, it's a conversation, right? They're considering. Sorry, I totally lost my train of thought. But at the same time, I think we're conflating two things. Like, I don't see the difference if Robinhood offered, sports betting on their app. It's just a different revenue stream, right? Because Polymarket right now, I can go and I can look at all kinds of random bets. And the cool thing is individuals can make their own markets. I can make a market for, I don't know, Jake Paul and Mike Tyson. I'm sure that already exists on there, but there's a section on there on Polymarket that's like influencers, I think, or creators, and basically random people make their own market for things. And like I find that really interesting as a concept, because honestly, whatever you want to gamble on, you can do that. And there's going to be a buyer and a seller on the other side. And so again, I just think we're conflating the regulatory and legal and securities aspects of a brokerage with what DraftKings does. And on DraftKings, I can bet on all kinds of random stuff. So why shouldn't brokerages break into that market? Why shouldn't DraftKings break into options contracts? Like I don't understand of course there's like legal requirements behind the scenes, but from a morality and ethics perspective, like it already exists. It's just the convenience of putting it all in one place.
Yeah, I think adults should be able to do what adults want to do with their money. So I love the fact that Robinhood got into it, and I think that they have a beneficial or a, what do you call it, like an advantage over the Kalshis and Poly markets, because your money's already there. But
Yeah. And if I can add one thing there, it's just an easy flywheel too. Like in the future, if they expand this, so it has a number of products. If you're using the gold card, you're getting a 3% cash back. You just put it over to your Robinhood wallet, and you're like, okay, I'm going to send it back to, instead of sending it to my bank, I want to actually bet on this certain thing. I'm pretty sure that this is going to happen. Or you invest it right there. They want to keep your money on the platform. This gives them another way to do that. So, it's smart. It works well with Robinhood. If SoFi did it, I would have concerns, even though, there's not too much different, but like philosophically, it's like, okay, what happened to Noto? Like, honestly, I would be like, I'd have valid concerns at that point, because it would be a fundamental shift away from getting your money right.
Sure. Yeah. No, that's fine. But let's reconnect it back to SoFi in ways that Noto might be a supporter. I suggest, well, no, you guys are adults. I don't care. How did the outcome of the election affect SoFi as a company?
Positively.
There we go. I mean, I don't know if everybody saw what happened. Like, obviously, everybody probably on this stream was paying attention to markets the day after. But like the banks, JP Morgan jumped over 10% in a day. Like JP Morgan doesn't move like that ever, no matter what, no matter how good their earnings are, no matter how bad their earnings are, it doesn't move 10% in a day. And it did, right? And so did Wells Fargo. And basically, so like SoFi was actually like one of the weakest banks in the entire market on that day, which SoFi's beta is, probably 4 or 5x JP Morgan and Wells Fargo's beta. So it should have moved a bunch more just based on that alone. So, and the takeaway from that, from a macro perspective, is people think that Trump is going to be fiscally a lot looser. That he's not going to crack down as much on the banks. There's going to be a lot more liquidity in the system. Banks are going to be able to transact more. There's going to be more M&A. There's going to be, greater interactions between businesses. There's going to be so again, whether or not that comes to pass, that's what the market priced in that day, right? That's what the actual buying and selling showed us, is that the market thinks that this is a really good outcome for banks. And again, SoFi is a bank, and liquidity especially is a big deal for SoFi, because we saw this last quarter, they started the loan platform business, but they also ended up selling, over $1 billion of loans in addition to the $1 billion they had in the loan platform business. Liquidity is really good for SoFi, because it gives them a lot of flexibility in what they can do. They have this member base that they can originate to. They can originate all those loans and then sell them to banks, which allows them to then just have a bunch of extra capital light income. So from that perspective, and then it sounds to me like, just based on the way that they've gotten into underwriting IPOs, the fact that they've got this new share program that they're going into, I think that SoFi wants to enter investment banking at some point. It seems obvious to me that is on their roadmap. Otherwise, they wouldn't be doing these types of products right now. There's lots of other things they could, they still haven't released level 1 options, right? But they are working on these other things, which means that I think it's a long-term priority for them to enter that market. And if M&A and IPOs get a tailwind, as Noto said in his interviews from Republican presidency, then that's good for them, right? It allows them to break into that space earlier. So trying to not be political, but at the same time, I think that those are the things that I noticed this week as a result of the election results.
Yeah, no, it wasn't just because of perceived positions and the impact on banks. Part of that too is markets crave certainty. And as we entered the election, I think probably you and I, Chris, like most of the nation, were thinking it'd be long and drawn out, maybe a legal battle that, and it takes weeks to figure out who's actually going to be president. I think maybe it wouldn't have been quite as much of a move, but I think if Kamala Harris won, popular vote, won electoral college easily, didn't need the other states, House, Senate, all that, or even gridlock in that case, we would have seen a very nice size move too. Just markets love certainty. And the nice thing about this election, and it happens just every 4 years here in the States, presidential elections are for 4 years. So even if the House and the Senate flip or flop, doesn't really matter that much. What matters is who is leading the nation, what policies that they're going to push. I think the one other thing that the market liked about Trump more than Kamala Harris is her positions, because it's really not her fault, just because she was thrust in at a very late juncture, but her positions don't seem very crystallized, versus Trump has made certain positions very, very clear. And so the market's like, okay, so he's repeated this like 50 million times about tariffs. Tariffs are probably happening. I mean, you can't guarantee it. It could be a negotiation tool, but it loves that kind of certainty. And so it's kind of like, although we didn't see the benefit when Noto did this, giving guidance out through 2026, when a company does that and they're like, hey, over the next 5 years, this is where we're headed as a business, not just some projects that we're working on, but this is where we're actually guiding. Markets tend to absolutely love that and eat that up. So I think that's what we got.
Yeah,
Megatevis?
I think tariffs are definitely going to be a negotiating tool. Like, people are losing their shit over tariffs because they think it's the end all be all, and realistically, it's going to be a starting point. Like, they're going to start with a tariff and they're going to come at a number, that's lower, but it's still not going to be zero. And I think that's the point. And I think at the end of the day, the US market is the best game in town, right? It's the most accessible for the most amount of people. It's where eyes from Europe and Asia and Canada look to invest. Like, I'm not investing in any Canadian companies because look at the rate of return over the past 5 years. It's not going to make sense for my wallet. And that would fundamentally be the case regardless of the administration that came in. The US equities market would still be the best game in town, the best place for you to put your money. But I think with this administration specifically, the policies do come into effect and you have a harder rally than you would have otherwise, because, you have a candidate that's running on strengthening the US power even further, and not focusing outwards, but actually focusing inwards on the economy. And that stimulates a lot more growth. It stimulates a lot more activity that's going to benefit all of these businesses. And so while, there's a macro factor of, hey, there's a lot of cash on the sidelines and they have nowhere to deploy that cash as rates come down, like they're going to go into foreign equities. They're going to invest in companies in India or Canada or whatever, Colombia, with a vast amount of their portfolio. They might diversify there, but they're not going to put the vast amount of their portfolio there. Like, that money was going to come into the market regardless. And I think we would have had a rally regardless of who came to power. But then on top of that, you add a premium to say, okay, well, this candidate is going to actually focus on domestic issues rather than international issues. They're going to focus on cutting spending rather than spending more. They're going to focus on, strengthening that economy versus, all of this, let's say, diversification elsewhere. And that is going to help the bottom lines of these companies from a fundamental perspective as well. And so I think you have both of those things together that the market realizes, which is contributing to that strength in that rally that we're seeing.
One other thing, I guess, that nobody's mentioned is taxes, right? Like, just on Harris, her plan was to raise corporate taxes to 28%. Trump's plan was to cut them, right? So the market had to price that in.
21 up to 28, 21 down to 15.
Right. So, and that's a huge jump in terms of and so the market kind of prices things in the middle. And as soon as there's certainty, then they price that in. So if you price in, a 6-point deduction in taxes, right, that means that corporate profits go up 6%. So the market ergo should drop or should go up, call it 6% on that day for that reason, right? Like just the basic math is just that pricing that in means that things go up, even if the company performs the same. If they're paying less taxes, they've got more earnings.
Any other topics that you guys wanted to touch on over the last, well, I guess 2 weeks, because we didn't have a call last week?
Yeah, we didn't even talk earnings.
Yeah, true.
It's been like
So-
our last show was before earnings.
Or well, we did the Tuesday morning show.
Yeah, we did.
So
Barely counts.
what additional things did we pick up from earnings, from the 10Q that you guys really liked? Interested in your thoughts. Maybe Chris, obviously you might be thinking of something in particular.
Oh, the loan platform business, I think, is a game changer. Just from
Why did you think that this is not as big of a deal
no,
as what we think?
I think he said it's not a big deal for members. Correct me if I'm speaking.
No, exactly.
So he thinks it's a big deal, but not necessarily for members.
It's a huge deal, yeah.
So it's a huge deal for the company because it's capital light revenue. Because more than anything else, I think that one of the things that as people digest the news that they're going to understand that they weren't before is, number one, this is almost entirely incremental. Number two, it's almost entirely no risk. Number three, it shows that SoFi really can pull things out of like pull a rabbit out of a hat that nobody's expecting. Like I had thought at some point that they'd want to expand their business in a way so that then something similar to Lending Club's marketplace where they just sell loans immediately, right? But I thought that it would be like maybe a slow rollout, maybe something that they announced. Like they went from literally 0 to 1 billion originations in 1 quarter. That's nuts. Like the fact that they were able to spin up a business that's, got a run rate of, call it 180 million annualized in the very first quarter. Like it wasn't 0 before, right? Because they still had their referral fees, and that was 13 million or something in Q2. But it jumped from 13 million in Q2 to like 55 million in Q3.
5x
right?
Or something.
Right, like 5x in 3 months. And the fact that they now announced it means that now they can actually be also more public with marketing it to investors, to other banks, to other capital asset managers, and that sort of stuff. I think like that alone is a really big deal. And then besides that, obviously they got lending is back into growth. Financial services got a big boost because of the lending platform business, but it's still growing like gangbusters. The member growth is growing. Like I think it really was a transitional and an inflection point quarter in a lot of ways. All of a sudden we went from, the growth was slowing. Last quarter it jumped, and I don't expect it to go back down from here. Like it might in Q4, because Q4 year over year is a really hard comp, because last year they really outperformed because they were, looking for the positive gap earnings. So Q4, it might go back down a little bit year over year, but I think from there, like I think the return to growth is here. I think the macro is shifting. And it just, in Q2, I was really worried about what like the loan performance would look like. A lot of people were reading into that. They had to come out firing in the earnings. I don't even think they really need to come out firing anymore. I think they just need to execute now. And it's going to become so blatantly obvious that this is a great play that it's just they don't have to, come out and say Al Carp style and say, we're going to take the entire market. They just got to execute, and it's just going to keep going up. Those are my thoughts.
Yeah, someone said in the chat, they said, is it possible for SoFi to take Upstart's market share? Upstart doesn't have market share. So they are, not originating that much more than what SoFi just originated in their first quarter of doing what they just did. I think they originated in Q3 1.5 billion. SoFi did 1 billion.
Personal loans.
Yeah. And they had loss sharing agreements on that with some of their bigger partners. It's not the same thing. And plus, it's a lot lower credit bands. SoFi's much up in the credit stream, in the credit spectrum.
They're higher FICO scores,
which is a much bigger market, much bigger market. So yeah, I think that this is super exciting. I keep saying this because I really want to highlight this. Before, SoFi would bring on a bunch of members, and there could be a ton of application turn away, not just because they don't fit into SoFi's, underwriting requirements, but also the fact that SoFi just might not have the capital to give out. They might not have the capital ratios to even want to give them a loan. So then they have to turn them away. Having a stream of banks and institutions that might want those loans, the ones that SoFi would want to underwrite themselves, is a theoretical match to how many members that they have on their platform for originations every quarter, which is nothing they've ever seen since they've been a business. So it's absolutely incredible. And before they were a bank, like way before, SoFi was taking on a ton of risk every single time that they'd get a loan onto their book, because they'd have to eventually flip it over the next 3 months or so, right? So they had time was like not on their side. This doesn't even get placed on their book. By the time that they actually originate the loan, it's already been signed away. So it's immediate, nice, like Chris said, just fee-based revenue that is accruative. Now, I don't agree that it's 100% incremental. I think that Anthony Noto is being generous whenever he says that there's little overlap between buyers of this product versus buyers of loans off their book, but it is still good, but Tevis?
Well, I was also thinking about it from financial services perspective. Like, if they're widening their credit box just to originate on behalf of third parties, right?
They might not be.
But my point is that they're opening the realm of possibility to go after people that they wouldn't have otherwise. Like, that's the safest probably statement that I can make about that. My point is, this is really positive for loan platform business, and everything that you and Chris said, absolutely. And it's definitely going to result in a huge addition to the bottom line, especially when more partners come forward. And when SoFi originates much more than $1 billion with this, which they mentioned in the Q&A that that was their intention. I wonder also, from a cross-selling perspective into financial services, and from a data collection perspective for Relay and others, and even new product launches, how influential this could be, right? Because if you think of SoFi going after the high income earners, the top FICO scores, that's one cohort that they're really going after, but they're saying no to the majority of people that they're speaking with. If then they have exposure to those same people through the loan platform business, I wonder if it could be mutually beneficial for the other segments of their business to say, hey, actually, this is not somebody that we would want in our own personal lending side because they're not, their FICO isn't high enough, whatever. But you know what? We can get them started on a lower tier or lower risk product in financial services or something like that, get them in the ecosystem and cross-sell them that way. Or at the very least, we can collect their data and leverage that data to make smarter decisions for either for underwriting or for, just in general, Relay and building customer portfolios of these people.
I actually don't think there's going to be a whole lot of credit box expansion, just because the way that I've always saw credit was like each individual band has its own sort of unique skills in order to understand those areas, right? And so there's been companies that understand, really risky credit, and then there's companies that understand, much better. My dog is making a ton of noise. But anyway, so I don't know if it's going to be an expansion of the credit box, or if it's just going to be more of what they're already doing and so much more that they can't write it themselves. Now, one of the things that I think is very interesting, unlike Upstart, is that they do have that cross-sell ability. But the customer acquisition cost, I have to keep going back to and just thinking, like, if they had institutions to come and say, hey, we want $1 billion of originations this quarter, they're like, okay, fine. Like, we have that available to us right now. if they have $6 billion come to them and they say, hey, we're looking for originations, and they don't have that in the applications, they're not going to say, hey, sorry, come back. They're going to go out into the market and look for people who are looking for loans, right? Whether that's through Credit Karma or a bunch of other, partners that they can find people who are hot leads looking for loans. SoFi will pay for those, which will lower the total profit that they'll make on a per loan basis, but then they can cross sell. Like it actually changes the thesis for
But
SoFi. I think that this product is that big. Roy?
So the one thing I push back on just a little bit, Tanner, is the customer acquisition cost didn't actually. So from first quarter to third quarter, SoFi went from 3.2 billion to 4.8 billion in loans. So that's a 50% increase in 2 quarters, and the customer acquisition cost per member didn't go up.
Yeah, but I don't think that I think we're theoretically meeting our bands, but I don't think that we are. I'm sure there's a lot more origination.
Yeah. No, it's a good.
You know what I mean?
I'm just anyway, sorry. Go ahead, Roy.
With the customer acquisition costs, you want to, I think, do it the way Tanner did. Otherwise, you're looking at like the net cost, which I don't think is particularly useful. Versus like what does it actually take to acquire new members that have not been with SoFi?
No, my numbers were new. His were net. So his were subtracting out the churn.
Yeah, his are better than mine.
All
I
right.
need to adjust it.
So do it like Chris, just like I said. Nah.
Yeah. But yeah, so then there's one other product line that I think is important. It goes hand in hand with the loan platform business and might actually expand the loan platform business. And that's loan servicing, which previously was not looked at it as its own separate product category, but it officially is in the 10Q, in the sort of bubbles that they show off. They've been doing this for some time. They're doing this externally for third parties for personal loans. They just recently started doing this for student loans. Actually, in the 10Q for this quarter, they said maybe sometime into the future we'll do this for student loans, but not today. And Vadim had found online they're doing that today. So some period at the end of September and into October, they started servicing their own student loans. Now, that doesn't mean every loan, but that might mean a percentage of the future loans, or maybe all of the SoFi student future loans. Chris, I'm not getting a clear answer on this, so I want to pick your brain on this. Can they do the loan platform business for student loans as well? And like, would there not also be a lot of, demand for that as well from an institutional side?
Did they say they couldn't?
There's no reason they wouldn't, right? Like they can, yes, is the answer. I don't think they are right now. I'm not sure. I don't know how much demand there is for personal or for student loans right now, because they haven't sold student loans in the last couple of quarters, and they actually do right now. They have on the balance sheet. They say that it's held to maturity at fair value is how they're accounting for their loans, which is something that like I actually think they should be selling student loans. I think that for the amount of capital that it takes up, you get better risk adjusted returns, I think, for personal loans than student loans, because the net interest margin is so much higher, but you don't get, but it takes just as much capital because they're both unsecured loans, from like a capital ratio standpoint. So I don't know why they're not selling student loans. I would like them to be selling more, but there's no reason they couldn't do that. But yeah, they're not right now. I do think servicing their own student loans is a big deal because previously they'd been serviced by Mohila, and Mohila has had some issues recently with their servicing. And so like the fact that they're bringing that in-house, I think they probably have the technology already because they do it on their personal loans, and it'll be slightly accretive to revenue. And I think it'll actually make it so that their members are happier, because they're doing it in-house and they don't have to deal with third-party risk from Mohila.
Yeah, and by the way, some of the problems that Mohila had was actually with the student debt relief things. They had some problems sending out people that deserved relief or something like this, and they were still getting statements and everything. Any clarity with that and the new Trump administration coming in? This is a super leading question.
I think we've heard the very end of questions about student loan forgiveness. And actually, so this is a long tail possible benefit, but would be absolutely huge for SoFi. I mean, we're talking about Doge, right? The Department of Government Efficiency. One of the things that Vivek and Trump and Elon have talked about is completely axing the Department of Education. Now, Roy might know a little bit more about this. I think that there's a possibility, and there has been there has been some talk about how it's possible that you would privatize student loans, because if you don't have a Department of Education, who's going to give out federal student loans? And if you privatize all student loans, SoFi is 60% of the market right now. And so like that could be a really big tailwind. Like if that were to happen again, I don't know how you'd handicap those percentages.
If federal student loans go away, what's SoFi's stock price? I mean, just from a sentiment perspective, are we like, do we blow past $50?
I don't know, because then at that point they'd have to build out this massive infrastructure for it, and they'd have to find ways to sell those loans also, right? So like it wouldn't be an overnight thing, because they just don't have the balance sheet to be able to take on the amount.
No, but they do with the loan platform if they start doing
that. They could if there's demand, right? But it's going to take a little while because the federal government underwrites those and then guarantees them, basically, right? Like, well, my tax dollars guarantee them. Right? If people default on their student loans, they actually don't get discharged in bankruptcy, but if they don't pay back, anyway, it's convoluted.
Right.
You don't want to get into all of that right now.
Right.
So
the credit you're
is,
getting into every credit box. That's not
exactly
what SoFi does.
And so, and it's a lot of young. So that's a really complicated issue. But who knows?
Yeah, I don't think that the Department of Education is being shuttered. It's been around 44 or 45 years, 1979, I think. And if the government was trying to do that, they would have the fight of the lifetime on their hands, just because every single college out there would oppose them, just because they love that money coming in. And if that is ended, including Pell Grants, they'll have to readjust and change a lot of things. They don't like that. But, like what Chris said, is if something like that happens, or even not in that kind of environment, but for whatever reason, whether it's regulation, whether it's that they're no longer subsidizing the rate, and so private loans are actually put on equal footing, those are massive tailwinds for SoFi. Now, the thing is, I think that's actually not too unlikely, because that seems to be at least the shift that would be able to pass muster. That you still have federal student loans and a federal student loan system. You still have them doing Pell Grants. You still have messing with state departments of education at the primary level. But ultimately, you have private loans that are equally as available and perhaps preferable, just because of service or rates or something else. That's probably good for everybody, actually. So, so massive tailwinds for a while for SoFi. And it would lead to them selling loans, of course, but in fintech, there's these companies tend to be very agile, and so some of those that have divested from student loans, Discover, they'll look to get back in that. There will be others that are not even in student loans at all, maybe even some big guys, they jump into this market too. So it would last for a little while, but it would be like a gold rush that that doesn't happen and just continues to be just crazy numbers year after year after year. It's a couple of good years that are phenomenal, and then things start to tail off.
I think also, just to add on to Roy's point, and to this discussion around the government's impact, the Trump administration just floating the idea and just putting that proposal to the table, I think that in itself will boost SoFi stock price, or at least SoFi sentiment. Because again, if we remove this absolute thinking, it's not a binary thing. Do they do it, or do they remove the Department of Education, or don't they? I think the reality is that there's going to be, pushback on both sides and arguments to be made on both sides. And the conclusion is going to be something in the middle, but more than what is right now, right? Like, it's going to be a more beneficial situation for SoFi than what it is right now. And I think that in itself, and just that news in itself, like, remember how much negative sentiment or negative news even the Biden administration canceling student loans had for SoFi? Like, I think the inverse of that could be possible if Trump talks about, hey, we're going to remove the Department of Education, and so it doesn't necessarily need to come to fruition, but even to be floated and to be contested and to be in the court system and, new developments, like I think that in itself, people will buy on the probability of that happening.
Which potential Trump policies or issues that he had stood on would be negatives to SoFi as a position?
I mean,
A lot of
tariffs.
eyes in the air. Like, you guys are all playing chess. You guys are visualizing the board. And
I mean, tariffs ultimately are not good for an economy. It doesn't tend to have much of an impact on the first year, but it does bleed consumers dry, which would impact SoFi and could possibly send the United States into a recession. So I hope and I think that it's largely going to be a negotiation tool because it's kind of like shooting yourself in the foot so you don't go on vacation in someone else's country. It's like, you can do that, yeah, but it hurts. So hopefully just negotiation tool, but like it would be a headwind. There's not much though, as far as policy that I've seen.
Yeah, I can't really think of anything apart from the tariffs.
Yeah, I think on a whole, like more deregulation is generally good for businesses across the board, especially for something that's so highly regulated as SoFi's industry.
Yeah, one thing we haven't talked about is crypto, right? Like there's probably a much higher percentage chance that the SEC deregulates crypto or regulates crypto, right? Makes it so that banks are able to hold digital assets. And I think if that's the case, SoFi is going to be one of the very first banks in the United States to offer crypto assets on their platform. Like it's something that Noto loves personally.
Yeah. I mean, they have the technology still there. They have the contacts as well. I mean, it's really easy to turn back on, I'm sure. But yeah, and that's one thing that Trump spoke about was that getting rid of Gary Gensler, just because he's done a terrible job at the SEC. And I agree. Like he's been absolutely terrible. So he needs to go. Somebody that is actually sane on crypto. I think Gensler's problem is he thought the SEC stood for Stop Everything Crypto, and nobody really told him. So it's kind of not his fault, but yeah, he needs to be gone at this point. So
I have a
Did you
super
guys-
video coming out on this, so I'll talk about this later.
we can wrap after this, but I'm curious to ask you guys in the after hours your thoughts on that Jay Powell clip we all saw this week.
I'll give my opinion. I didn't think much of it.
Yeah,
I found it pretty hilarious. Like
I thought it was funny.
the shortness of his answers. He's like, no.
Yeah, I don't even think he's right. I think he absolutely could get canned.
Oh yeah, but like again, to my earlier point around the Department of Education, like there will be a middle ground, and there will be more pressure from a Trump administration versus another administration, putting pressure on these institutions, putting pressure on not only the Fed but on all of these government entities to push efficiency, to cut waste, to cut all that spending. And I think that as a whole is a good thing that's driving the market higher, because everybody recognizes that this is a money pit. Essentially, it's an inefficient money pit. So even if Jay Powell isn't removed from his role, I think just having his feet closer to the fire will create more productive results.
Do we want to wrap and get into the after hours? Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time.
Bye for now.